Let's talk to Ronnie Chopra. He's the Chief Global Strategist at Horizon Stockbrokers. Very good morning to you, Ronnie.
Good morning.
Right, we've got three areas, three topics to run through. Let's kick off with the euro US dollar. We've got a line chart suggesting traffic is one way. Is this likely to continue?
I think traffic is two ways now. We had that recent peak of 125. People talking about 130, but I think I mentioned on your show before, I'd be very surprised if it goes to 130.
Right.
And I think the dynamics as well have kind of changed in the last week or so when we've had this extreme volatility in the markets. And I think with this volatility, it kind of strengthens the case for the US dollar and for the Japanese yen. And I think that the likes of the euro will suffer accordingly. Also, with regards to the euro, we have the Italian elections in early March, which is not too far away now. And there's a lot of uncertainty surrounding who's going to take over. So that's going to put further downward pressure on the euro. We've had large hedge funds in the US shorting many Italian stocks in recent weeks. And that too kind of just shows that there is a lot of nervousness in Italy, and that will kind of extend to other countries and subsequently the euro. Also with the euro, just from a purchasing power point of view, I think that it is extremely overvalued. I mean, we're almost at parity against the pound, 113, 114. So I just think that it is extremely overbought at the moment. We have all these other issues, including the German uncertainty with who's going to be in their government, who is Merkel going to continue as chancellor or not. So there's a lot of nervousness, and we've had a fall of approximately 2 to 3% from the recent peak, but I can see the euro dollar going below 120 definitely by early March.
Understood. Okay, so let's move swiftly on to Glaxo. Not a very good looking chart.
Yes, but I think the results were very good.
Right.
Or better than the market expected. They are one of the truly UK global blue chips. They have a market cap of approximately £65 billion. So they are one of the larger companies listed in the FTSE 100. And results out a few days ago demonstrated that things aren't as bad as perhaps this chart shows. The shares have come off from just over £17, and at the moment they're hovering around the £13 mark. Yep. They're giving a dividend yield of 6%, so they didn't cut their dividend yield. There are some concerns with regards to, they have an asthma drug called Advir, and there are concerns that in the US there are generic versions that are going to come into play, but so far there isn't any real competition. But Advair is one of their major drugs, and in the future that could dent earnings. But having said that, they've kind of diversified their pharmaceutical drugs. The pipeline is quite promising. They have reduced costs considerably. They have a new CEO in charge, a lady. I think her name is Emma Hammersley, is it? And she was fairly bullish when results were announced. But yes, at the 6% plus dividend yield, they are a major... You have
those in your portfolio right here, right now.
I mean, there could be a little bit of nervousness because of the...
Market volatility.
Market volatility, and also concern about generic versions of this drug, Advir. But they have sales of £30 billion a year. They have a decent pipeline. They've cut costs considerably. And the valuation, when you compare them with some of the other large pharma companies, the likes of Astra Zeneca, their market caps are fairly similar now. There's only about 10% between the two. So obviously AstraZeneca has been touted as a bid target for many years. But in my eyes, this has a lot more value. And this too could be if they don't get their act together.
Understood. Okay, so let's wrap up this segment with West Texas Oil. What are your thoughts here?
Well, I've been fairly bullish with oil over the last, 6-8 months, mainly because of the Saudis ensuring that they cut production so that they have a successful flotation of Aramco. But in recent weeks, the price of oil has started to slip a little bit, and there's obviously the turmoil in the financial markets, puts downward pressure on the price of oil. Also, with the kind of the Saudis have obviously, they're still trying to cut production. But we have the Iranians now that said a few days ago that they're going to pump up production by 400,000 barrels a day. But of major concern is that the US is now producing more oil than Saudi Arabia, over 10 million barrels per day. So then you kind of have a bit of a glut. And in recent weeks, this is coming to full effect. And also now, also from a technical point of view, we're down about 10% from the recent peak. And with the continued volatility in the financial markets, that puts downward pressure on the price of oil. And with supply concerns, and also a bit of profit taking. You know, we've more than doubled since January 2016. We're still at around the $60 a mark barrel for WTI. And so, yeah, some profit taking is inevitable. So I can see this going down to maybe the low 50s in the foreseeable future, especially if we still have these jittery markets, which, you know, I think the equity markets do play a fairly substantial part in the price of oil as well. And so, yeah, there's nervousness, obviously, in the markets at the moment. We have supply concerns. And from a technical point of view, the price of oil, you know, it seems to be coming off a bit, and I think it could probably come off another 10%.
On that note, Ronnie, thank you very much indeed.
Thank you.